Okay, and we are live for the first Trade Informed backtesting webinar of the people that I have seen on the chat. Welcome to everybody. People from Australia, I guess it's night time over there. Israel and India, we're in the afternoon in our time zones. And anybody from the US, good morning to you. Okay, so I'm going to be starting the webinar in just 1 minute. If there is a problem with the sound, could somebody please let me know in the live chat if you can hear me? Just make a comment or give me a thumbs up or something. Okay, that sounds good. Right, we've got a yep. Yep, 1:04 AM. Oh, fair play to Oz. Good man. Right then, let's go back one actually. Okay, so what I'm going to do in the webinar, I am looking at all the chats, but I will be speaking and presenting for most of it. So if I don't answer your question or respond to your comment, I will do so at the end. The plan for today is I am going to have a look at the latest backtest model, and I released this one about a week ago, and it is the Euro US dollar with the PSAR indicator. We're going to do some live backtesting. We're going to have a look at this model, some of the settings, and I'm going to have a look at this same model but looking at some different markets. I'm going to look at some ETFs and respond to any chats. Let me know if there's anything in particular you would like me to test. Finally, any questions, comments, I will look at those at the end of the webinar. It should be about 25 to 30 minutes for the webinar, so I am looking forward to it and starting now. On the screen, you can see the Euro US dollar model that I featured in the last video. So I wanted to go back to some of the things. This is just some of the thoughts that I have had since I have released this model. So one thing I did introduce for the first time in this model, in its current form at least, is an optimizer. Now I want to very briefly state about optimizers that I do not believe that when I am testing the settings, finding the best settings from a backtest, that I am optimizing a strategy to be able to perform at that level. What I'm doing is finding the best settings from a historical period. However, I do believe that doing that exercise can be beneficial in itself, and it can also be useful in other ways as well. And one of the ways I wanted to demonstrate was to start off with a model that has been quote unquote optimized, as in this one. So we've got some settings which are pretty good for the Euro US dollar because I looked at them before, and this is how I got these settings. I went through and looked at the acceleration. This is the PSAR indicator, and I started off with 0.01 and I went up to something like this, optimize for net profit, and hit optimize. I can see that there is probably better values on this side, so I went to something like this. And again, I found out that the faster settings, we can see here that actually the very final setting I've tested here performs the best. So this in itself is pretty interesting to me. I've read a bit recently when I was researching this indicator, and a lot of people were saying how much they like the slow settings. Maybe. However, the results here over an extended period of time are showing all the way from red to green that historically this indicator and this market combination has performed better with a much faster PSAR than is generally used. So I can go up again. So I am using the optimizer to find quote unquote the best settings, but I'm also looking to find patterns, and just using the conditional formatting here, we can see that we get some patterns. So there's not a huge difference, in fairness, over this amount of time period. 164 to 220 net profit, going up to 241. If I was to just drag my mouse over there, I can see that the average is just over $200,000. So the real conclusion, and I just want to make this point, the real conclusion that I'm drawing out of this is that we have some stability. Using the optimizer, we can see that we do, and the colors, we have some stability in our results. A faster PSAR is showing in the test that I've done to be fairly conclusively better than a slower one. And this is much faster. I'm going to have a look at what this looked like on a chart in a while, but we can see that it is a much faster indicator, is producing better results. A thing that I've introduced since the video is another factor, and I will demonstrate that now. It's easy with the model that I've got set up to add other factors into it. So I've set up an EMA filter, and this is very simple, a directional filter. We take long trades above this EMA and short trades below, and we can use the optimizer once again to see if we can find some good settings. So I already know, because I've tested it, that a short EMA is a lot more effective. Let's stop that. Sometimes we don't put the right numbers in. I already know that a short EMA is more effective than a long EMA. And what I mean by a short EMA is really anything, well, lower than 10. We can see the best results here. The greenest results are the numbers between 4 and 10. So we can see that an EMA filter adds value in the backtest to the backtest on a short version, but it actually takes value away the longer it gets. And I can see that if I test all the way up to 200, I happen to like the 200 period EMA, but in this trading strategy, it's making the performance worse. And we could see almost as conclusively that if we look at our traffic lights here, we get all the way to red, and we see it's actually harming performance. So even though I'm describing it as an optimizer, I'm often presenting the best results from the optimizer. It does not at all mean that I think that you're going to get these exactly the same results as these. However, I do believe that we can draw some broad conclusions out of all of our backtesting, and using the optimizer is a useful tool for that. So if I'm just going to take 1 minute and have a look at the chats. Hi Raphael. Hi Thomas, if you are still here. Good morning to Blue Beast. So I hope you're enjoying it so far. Please let me know. Give me some comments. Give me some feedback. This is the very first live webinar that I have done. I am probably going to be inclined to talk about things that interest me rather than things that interest you. And I'm here for you, not just to give out my opinion. So please let me know. Drop it in the chat box and I will be checking it throughout the webinar. Okay, so I've made my first point and I'm just going to reiterate it, that I've got a new optimizer tool. I resisted using an optimizer in the models for quite a while. However, I now realize that what I was doing without this is basically optimizing it myself. I would try different values. I'm sure most back testers do, and look to see which was better and which one was worse, but I was not doing it in a systematic way. So I believe this optimizer in the format that it's got is going to be a useful tool for me, and hopefully I can give some of the results to you as well. Okay, so we can see, let's just put in these values, just for the hell of it, let's put in these values. What did I get? It was EMA filter at 2.27, let's put it in at 6. There we can see something approaching the best values that we can get over this time frame. If you can't see the screen for my head and my image being in there, please let me know as well. You may notice a slightly different format to these. This was as a result of some feedback that I've had. The green line on the chart here shows the trading strategy, and the blue one is the equivalent buy and hold. So we're not showing any cost of tradings in here, which you can and indeed should do before you get a final strategy. However, we've got them onto the same graph. This blue is actually showing the same information, but it has been rebased to 100,000 to represent the buy and hold scenario. Okay, so I said at the start I wanted to look at some other markets. I know Avi has said that he looks at ETFs. I know Oz has said FX and CFD. So we have got some FX. We've done some FX. Index futures we're not going to do today, but I do appreciate the comment there. So what I'm going to do is open up the same model, exactly the same, but I'm going to put one of my favorites into it. In fact, I've already done this. This is one I have prepared earlier. And we have the SPY. So I'm going to close out of Euro US dollar. On the screen now is the SPY, the SPY, and I have used a slightly longer period. I've used my classic daily backtest range, which is from 2000 up until the present day. Sure, most people are familiar with the SPY, tracks the S&P 500 index, dot-com crash, financial crisis and subsequent. So now we have got a fair comparison on here showing the SPY and the green of the trading strategy. So I have already done a little bit of optimization here. So I'm showing some results that look pretty good on paper. However, let's go back to the optimizer and let's start off with the PSAR accelerator, because what I've seen so far, I think this is probably the key factor in this type of trading strategy, the acceleration factor. And let's go all the way up to 0.2. Again, I'm going to keep it simple, optimize for net profit. So it's going to chug through a range of different results here. We're looking at long only, quite a simple trading strategy. Anybody could follow this trading strategy. And our traffic lights are telling us, once again, I'm not sure if it's a coincidence, but once again, if this is the traditional 0.02 acceleration, it's not the most effective in the backtests that I've done so far. We have to go a lot quicker. So 0.4 will be twice as quick, etc., etc. We have to go quite a lot quicker before we are getting the best results. However, what we have here again is quite a stable range. If we take everything in this range here, we've got quite a lot of stability. We've got an average of about 450,000. And the best results again appear to be off the chart here. So if we were to do it higher, we may get a better back-tested result. But what we can see here is the 0.16, let me see, 0.16 that I had on there is pretty fair. It's more or less in the middle of this range here. So it's pretty fair. So if I was to do from, now let's go to the optimizer, if I was to do from 0.1 up to 0.25, and as we guessed, in fact, the best result we've had so far is actually above there, which is interesting. So if I change that to 0.25, why don't we have a look on a chart what this type of acceleration actually looks like. So I've got, let me have a look, I've got the SPY up here. I'm going to have a look at stock charts chart of the SPY, and I'm going to bump it up to 0.25. Okay, you should be able to see on the screen now, this is the type of PSAR. They're not actually that clear, but you can see that they're changing quite rapidly. However, just a very, very quick glance appears that it is catching these decent swings up, the sort of swings up that we've had a lot of recently, when we have a week, even up to 2 week swings, and the market has just gone very strongly. We've had a lot of them since the depths here. So we're going to have a look shortly. I would like to have a look at, if we get time, what some of these trades actually looks like. But we can see that this is what the PSAR actually looks like, 0.25. This is what it looks like, the acceleration. So not crazy, and capturing some moves. So there is a bit of a sense check there. Okay, so we have the best theoretical results we've got here. Now I've tested this, if I can draw your attention down here, as a long only trading strategy. And I do this pretty often for equity strategies, stock index, stock market strategies. But we can test including short trades, and this is one of those that we're going to get some pretty eye-opening results. Now we can rerun the optimizer, and it would obviously be a good idea to do so, but whenever we see a parabolic uptrend in the results here, my immediate first reaction, and I'm sure it is of many of you who've been backtesting for a while, is there must be some mistake in this strategy. So what do we do if we think there might be a mistake? Well, first of all, we're having a look here at the underlying, the moves actually in percentage terms per trade. First of all, the very, very first thing that we need to do is scroll all the way down here and start to have a look at some of these trades. So I'm going to have a look at the very most recent one, October the 5th here to October the 12th, long trade. Let's bring stock charts back here. October the 5th. That's here. So we can see, well, we actually do have a trade there. So October the 5th to October the 12th. So we must have hit our profit target. Let's double check that. This is the kind of process that we need to go through no, we're actually closing this one. Let's get rid of that. So we do need to be aware of the settings we've got on here. Hasn't made much difference, but that was closing the trades after 15 bars, 15 days. So let's go back to our trade list, and we can see here it's still been closed on the same day. Right. Let's make sure we know all of the trading reasons. Back to the trade list. Right, it's been closed on the 14th of October, which agrees with the chart here. So we can say, as a sense check, right, we've entered this trade on the right day and we are closing it on the right day. Let's zoom in. Okay, 5th to the 14th. Okay, so are the prices being taken correct? 33874 to 34854. So 33874 on the 5th, 33874. Okay, so we know it's quite far up the bar, 33874. Slightly below this one, so that rings true. Looking at it, we're not getting a trade entry down here. It rings true. It should be about that level. We will go back later again and check the calculation. Let's see what we're getting out at. So it's a 2.9% move in the underlying market. 348.54. Okay, so we're getting out 54. So we're getting out somewhere down here towards the bottom. And this is a tendency of this particular indicator, that we get in somewhere near the top of the bar for a long trade and get out somewhere near the bottom of the bar, because this is the way the indicator tends to work. So sense check is saying, well, we've got one trade there. So if I was looking at this seriously, I would be going through a much bigger sample of trades. But we can see very briefly we've got some sense in that particular trade. Another thing that I want to point out to you in the myriad of things which can influence a backtest, it can make a significant difference how you calculate your position size. So all I've done is toggle there on using the average true range. So sizing a position based on the average true range, and sizing a position based on the percentage. And when I say sizing it, I mean we're risking a fixed percentage. This backtest model is set up to risk a fixed percentage of 3%. That's how it's sized. So 3% loss in the underlying market, or rather a 3 ATR loss, would be a 3% fall in our capital. If I toggle this, we've actually changed the size of our stop loss to 3%, and yet we're still risking the same capital. So our position size has to be different, and so this can affect our results as well. Right, I'm going to go back to the ATR because, as you can see, our drawdown is a lot lower with the ATR, and this is something that I tend to appreciate with the ATR. I'm conscious time is pushing on a bit, so okay, I'm going to read through a few of these comments. Many thanks to everybody. Okay, many thanks for those comments. I'm going to come back to those comments. There's some really good comments there. I really appreciate those. I'm going to have a look at one more market. So we've got here my initial results before I leave the SPY. These are my initial results. I'm going to do some more of these, and I expect this market, this model will form the basis of the next video, and I would like to make this webinar a regular thing, so I will come back to it. So I'm going to have some more in-depth look at it and see if we're happy with this type of crazy looking optimization, this crazy looking results graph, if there's some problem in it, if there's something that we should be aware of, and I think it would be a useful thing to come back to. But let's have a look at what's our next? let's have a look at the next model. Another one of my favorites, the QQQ, the Qs, which tracks the NASDAQ 100. Now the Qs, without even, let's just close down these other open models, closing down the SPY. Now, without even thinking about it, the Qs is a market, and the NASDAQ and tech stocks in general over recent years is a market that the PSAR indicator is suitable for. Without even looking at these results, we're looking for markets that are fast moving, and the NASDAQ and Qs and tech stocks that underlie it have certainly been that. So again, I've actually got very similar results, in fact the same entry, acceleration and maximum value here. I'm just going to drink some more tea. And either the same or a very similar EMA filter. So we know that just having looked at these two markets, SPY and Qs, with the same settings or very similar settings, we are getting very similar results, which is good to see. One difference, I had a profit target and stop loss set up. It's always good to see it's working both with and without target and stop loss. So a 6 ATR stop loss is producing better backtested returns. The reason I set it to 100 just out of interest is because it's pretty much inactive. It's not being used. In fact, it shouldn't be used at all. If it's a very, very active market, we could set it to 1,000. We can see it doesn't make any difference. Again, let's have another quick look. I don't want to keep banging on about this, but let's have another quick look at this. And we'll do more or less exactly the same as we've just done with the SPY. Do a few more than that. So we can see here, we haven't even gone very far, that these early initial values, same as Euro, US dollar, the same as SPY, they are not producing very good returns. As soon as we push into the what would be considered higher values traditionally, we're getting better returns. Right, we can see our traffic lights are telling us pretty similar story to what we saw with SPY. At the top level here, it's not exactly the same, but it's pretty similar. So the higher values are producing better returns. So we saw on the chart that we had a look at that a PSAR with these quite fast acceleration values doesn't look ridiculous, and it actually does seem to produce better results here. So I'm going to keep these the same. I'm not going to bother changing them. Not using the close, not using the strength close. So we do have, in fact, we were getting better, or quite similar results compared to the SPY in terms of overall profit. Now, one thing I'd like to have a look at is the Qs and the NASDAQ in general have had very significant drawdowns in the past. Don't look it now, but they were at the time. And this is what causes it to have a low MAR ratio, which is annual growth rate divided by maximum drawdown. So what we're getting here is a MAR ratio above 1. Again, this is theoretical, but it does show the sort of thing that may be possible, subject to more testing, rigorous testing. We're getting a good percentage of winning trades, and we're getting what we like to see, a nice healthy average winning trade, a good 2.5 times as high as our average losing trade. We can focus on a period, so we might say, well, why are we testing 10 years? Okay, let's look at the last, why are we doing 20? Well, let's look at the last 10 years. And we can see that we're actually hugging the index very surprisingly closely. End results not a lot different over that time period. However, MAR ratio very, very good because we've not had the drawdown. The drawdown's been very limited. If I do long trades only, more conservative approach, generally speaking, just taking long trades, this market has tended to go up. We can see that drawdown is actually even lower for this scenario. Compound annual growth rate slightly lower. However, we still have got a very strong MAR ratio and a creditable set of results. Okay, so I've talked enough. I'm going to have a look at the questions here. So thank you from everybody. All right, I'm going to take a question from Tom Lindberg. How do you think backtesting can help a discretionary trader? Well, this is something that I've certainly been asked before, and it's certainly something that I've thought about quite a lot. I think as a discretionary trader, the difficulty that many discretionary traders have is you have a strategy that is developed from very creditable sources, your own experience, but what can be difficult is judging between two what seem like equally plausible scenarios. So should you have a profit target? Should you have a trailing stop, for example? These are the sort of questions that you can get some quantitative data on by doing backtesting. So you can simply use tools. I say simply, you can use tools like random entry, for example, to simulate a 50-50 entry system. You can adjust the frequency of how often the trades enter. You can use if you trade above the 200, you have any mechanical elements to your strategy, you can put them in. And then once the trade has been entered, you've got a simulation of you in a theoretical model. You can then see how particular markets respond to particular exits, for example. You can test a 3 ATR stop loss or a 10 ATR stop loss. What you cannot do is you cannot replicate yourself. You cannot replicate how your emotions, how your chart observations and everything you use to go into entering and exit a trade, but you can still quantify the bits of your strategy which are quantifiable. And I think that's a worthwhile exercise. It doesn't have to be that difficult either, because you don't have to program all the complicated bits, potentially just the easier bits, and then you can try different ranges of outcomes and see how it affects your results. So trading becomes this is from Ivan. Trading becomes interesting with this optimizing tool. With which other indicators is it available? Quite simply, every indicator. This is a fairly new tool, the optimizer. It's going to stay in the models. At the moment, you have to just go into the code. I've got an explanation video, and change which cell it refers to. And that may seem complicated if you're not used to programming. And in fact, it's actually quite straightforward. However, this is the early stages and it will be much easier to adjust. I want to make it much more user-friendly. So the simple answer is, Ivan, you can do it now, and it's not that difficult. I've already published a video on it. Over time, responding to feedback from people, I want to make it easier to use. So you'll be able to have a list of however many you want here. You can have 10 indicators if you want. I'm not saying I recommend that, but you could do, and you could have your drop-down list, choose through each of them and do it exactly the same. So it's infinitely expandable, only depending on what is actually in the model. Avi, good to hear from you, Avi. Which other parameters can be optimized, says Avi? As I've just said, all of them. Anything you want, anything that appears on the model as a variable. So an obvious one, I haven't done it yet, is optimizing the profit target, stop loss, and trailing stop. All you would need to do is just go into the code and just point it to the cell you want to do. It's not difficult, but it will get easier as time goes on. Anything that appears on here and updates with the model, changes to 5 or 25, you can optimize. So, roll the dice, Oz. 2 questions. What's the percentage difference to the live market? And can you add the market data spread? Right, I'm not 100% I understand your question here. So feel free to contact me if I have not understood your question correctly. We can talk about it at the next webinar or offline. So you can add, I believe you're saying, can I add a cost of trading to the market? Because these are just open, high, low, close. Speaking a bit too fast for my own good. The historical data here is open, high, low, close data on the daily time frame. So if you want to add in a cost of trading based on the difference on the spread of entry, you can do so here, either as a fixed cost, however many pips or points, or as a percentage. Either of those are an option. So you can add those in to simulate the cost of trading. I'm not sure that's answered your question, but hopefully it has done. I've given it a go, but feel free to contact me about that further. Ivan, yes, this tool is available. It's for 2 ways. This is the latest Trade Informed members model. So information below this video, you can become a Trade Informed members, and members can download this tool for free, plus the video that I just described, giving more information about this model and how to tweak it, which is very easy as well. So that's available for members. It is also available at the current time in the Trade Informed shop. So should be a link below this video to there as well. So thank you for asking that question, Ivan. Okay, so I have gone on for longer than I intended to today. For anybody who is still on this stream, thank you very much for taking part. I would love to make this a regular thing, so please contact me, like this stream, or do whatever you can to let me know that you enjoyed it. Leave any comments on either this stream or the video, and I will do my very best to take them on board, and I look forward to speaking with as many of you as possible and more at the next webinar. So thank you very much.